Hi, I'm Leslie Koo. The war on Iran has not got any fruitful results. The US and Iran are still talking. There hasn't been any agreement on a final agreement on the points listed on the MOU. Moving forward in the coming weeks, the risk of war-related, the war on Iran-related events, actions will still happen. For example, Iran may again close off the Strait of Hormuz, not allowing any ships to get out or coming in. The US may again call back the fleets and block at the opening of the strait. So all these things will happen. And at the moment, at this juncture, after all these months of bombardment, attacks, verbal abuse, so on and so forth, market sentiment seems to be least affected by any fresh attacks, either from Iran or from US. You can see that the oil prices and the gold prices on the whole have been very steady, trading in a close range in the coming trading days for this week. I would say that this kind of sentiment will continue because everyone is waiting for any breakthrough between the negotiations of Iran and the US. So hopefully one fine day, in the early morning, the US or the Iran will announce that, well, everything is done, we have agreed on all the points, and so on and so forth. But that day, when it's going to come, don't know. So at this moment, market sentiment is still very cautious. It's still very, on a wait and see mode. That's why you don't see any big movements from the oil price and the gold price. That is the market sentiments so far last week, and for this week, it will be the same. But for me, my assessment is like there will still be risk, and this risk will affect the movement, the potential movement of the oil and gold prices. Let's look at the oil price. This is the baseline, and my assessment is that there is still risk this week. So, and it's volatile. Anything can happen. Positive news in the morning, negative news after lunch. Peace in the morning, attacks in the afternoon. So it's very volatile. That's why I expect the high probability of occurrence on the band above the baseline and the trailing band below the baseline. The probability of occurrence is high. But on the overall, I would think that given the current situations, my analysis will still see the risk bias to the upward momentum of the oil price. So it could happen that anything, how should I say? I would think that the situations can only get worse before it can get better. That's why I see the risk is biased to the upward momentum of the oil price. Now, let's look at the gold price. The gold, this is a baseline. The risk is biased to the downward momentum of the gold price because now it's pretty clear that the Fed will not cut rate. It will either maintain, and there is a high probability that the Fed may have to raise rate by the end of the year if the inflation continues to head up. The oil price in the global market may come off, but if you look at the CPI, the US CPI, or the US PCE CPI, US PCE price index, it depends on whether the domestic oil prices, I mean the oil price, the gasoline price in the US, will it be adjusted down? If it's not, then the inflation will continue to head up. And at a certain point, the Fed will have to raise rate. It cannot let the inflation keep on going up, the risk keep on ascending. Even though Trump, the US President Trump, will not like it, but that is the mandate of the Fed: control inflation. That's why I see, because of the expectation of interest rate is stay put or higher, that make more sense that investor will reallocate their gold portfolio, trim off the gold portfolio, and put it into stock market or US treasuries, which give you return, because if holding gold will not give you any dividend or any interest. You can only gain by the rise in gold price. That's why I see there is downward pressure on the gold price this week. It is still a potential risk for the gold price to go lower instead of going higher. This is my outlook for this week pertaining to the oil and gold price and the market situations. Thank you for watching. See you in the next one. Cheers.